Three things not to fix before your mortgage application. You know, the internet says that you should fix your credit and your income before you even talk to a mortgage lender. Is that good advice? Nope. I'm Peter Lindquist, and we're going to talk about things not to fix before your mortgage application. It goes against everything that you might have read online, and you can either believe, the occasional blogger or somebody who's done this for 32 years. It's your choice. But in reality, there are just no reasons for you to be listening to that stuff, and I'm going to tell you why. We're going to talk about why not to fix your credit. Don't fix your income. Don't fix your bank account. Talk to talk to your mortgage professional before you start going down that path. Let's start about talking about credit. Every site I've seen says, download your credit report and fix all the things that are wrong on it. And my question is, what do you know is wrong with it? Fixing an address from 8 years ago, is that going to fix your credit score? The reality is the first thing to do is to call your mortgage lender, okay? Call the mortgage lender and ask them, do they do a soft pull on your credit or a hard pull? Most mortgage lenders today do a soft pull on credit. If you apply with me as a pre-approval, the first thing we do is a soft pull on your credit. That means it has absolutely no impact on your credit score. There's not even a credit inquiry that shows up in your credit report. Now, if you prefer to work with a small bank or a small credit union, they may only work with hard credit inquiries. And if that's the case, while I don't recommend it, but call them right away and ask them, is it important to them that you self-diagnose your credit and then fix it before you go in? But the real answer is no. And here are just a few of the reasons why. So what you find online, in order for you to try to estimate how to fix your credit, uh, thinks of credit scores as though you have one credit score. You don't. You actually have over 50 different credit scores. It's all the same data, but there are 50 different formulas or more than that everybody uses. Mortgage scores can only be found by talking to a mortgage lender and having us pull your credit. And again, a soft pull inquiry has no impact on your score. I've had a couple of borrowers that before they came and talked with me, they paid off a collection, but they might have paid off the wrong collection. Did you know that by paying off a collection, almost never does it improve your score, and sometimes it can actually damage your score? Not logical, but that can actually happen. Another borrower paid off a car loan thinking that that would really improve their score, but it actually damaged it by 20 points. And in that case, they had to wait, they had to go out and take out a new loan before their score would increase. But they could only get that by talking to me, having me pull their credit, and giving them the direct advice. Or we get the, hey, I'm going to pay off my credit card on Friday, so I want to wait until next week to pull my credit. Well, paying off a credit card can take up to 30 days before it actually shows. So when you apply using a soft pull, we also get data, or we have access to some software that we can run that scenario through to see if paying off that card is even meaningful, or it will estimate kind of what kind of score you'll get out of it. The only way that we can do that is by we do a soft pull on your score, and then we use our special software that we can run it through and then model different scenarios. So if you're working with a lender who does soft pulls on your credit, there's absolutely no reason for you to wait before talking to them and getting your credit pulled using a soft pull. Okay, let's talk about income. So, I'll have people that say, well, I'm going to wait until my pay stub I get in 2 weeks because that's going to show my new raise. Please don't wait for that. Let's do your pre-approval right now, because we make your pre-approval subject to receipt of evidence that you've got a raise in pay. Same thing with commission checks. I want to wait until my next commission. No, you can just tell me what your next commission is going to be, and I can estimate what your income is based off of that. We'll collect that later, but don't hold off on your pre approval application waiting for that. Another one is, hey, I've got a new job, so I know I can't get a mortgage until I'm on the new job and I've been on it for a month or two. No, most mortgage programs allow us to uh, approve a loan even if you're not on the job yet at the time of closing. If your job is starting within 60 days after closing, under most mortgage programs, we can approve your loan and have you close, and we'll collect evidence from that employer that you're going to work there. Now, what about assets like your bank accounts? Hey, on Friday, I'm going to have an extra thousand or two because that's when I get paid. Nope. Bring your come as you are, please, because we can look at your bank statement and then we can add and estimate how much it's going to be once that comes. We can pre-approve you subject to getting the next bank statement. Don't wait for that, please. Or things like, I'm going to sell my car, so I'm going to wait until after I've sold my car. That's a big one because a lot of times when you sell your car, the documentation that we need to collect is different than what you might think. We need an appraisal of the car and car title. And what if you get cash for the car? How are we going to work with that? Talk to us before selling the car, not waiting for it until after that. Or one of the big ones is, I've got cash on hand at home, got $5,000, and I'm going to run in and deposit that. I'm going to wait till that shows on my statement. Then I'm going to apply for a pre-approval. No, cash on hand at home, if you deposit it, actually represents a problem. We may not be able to even use it as evidence or as money that you can use towards down payment. It depends on the program. It depends on the mortgage lender. So the big key is talk to your mortgage lender before you do any of that stuff. I have to tell you, the internet is wrong. I even asked ChatGPT just a few minutes ago, should you wait? Absolutely, yes, you should wait. And you should go fix everything and essentially go fix your credit score. How would you even know what to do with your credit? The credit scores you get online are different from the ones that we get. So all of that advice is wrong. I want you to follow this advice. Talk to your mortgage lender before you go about fixing anything. We can help guide you and make sure that whatever actions you're taking, that they're actually going to be meaningful. We can pre-approve you subject to different things happening. So, these are a few things not to fix before your mortgage application. And the real thing that I want to say is, please come as you are. We want to talk with you and figure it out together. If you like this video, don't forget to share, subscribe, click that little bell, comment, one way or another, interacting with what you're hearing here. If you've got questions for me, make comments below or send me a text. I'm glad to work with you to see if I can answer any of your questions. I'm Peter Lindquist with the Lindquist team, and I look forward to hearing from you.